Hey there, business owners! Today, I'm diving into a topic that every UAE business owner needs to know about, the UAE Corporate Tax for 2024. So buckle up, because this is everything you need to know in just 3 minutes. First off, what exactly is UAE Corporate Tax? Simply put, it's a direct tax on the taxable profits of your business. Think of it as a way the government collects a share of your company's earnings to fund public services and infrastructure. It's a significant shift in the UAE's tax landscape, so let's break it down. So who needs to pay this tax? Well, pretty much everyone. UAE-based companies, foreign-managed businesses, and even individuals engaged in business activities with an annual turnover exceeding AED 1 million. Yes, that includes you if you're operating in a free zone or managing a foreign company from the UAE. Now, how does this tax work? It's a self-assessed annual tax, meaning you calculate and pay it yourself. The tax period usually aligns with the calendar year, but can be adjusted to match your financial year. Payments are due within 9 months from the end of your tax period. For example, if your tax period ends on December 31st, your payment is due by September 30th of the following year. Calculating your taxable income starts with your accounting income. That's your net profit or loss as per your financial statements. You'll then make various adjustments like deductions and reliefs to arrive at the taxable income. Here's the kicker. There's a 0% rate on taxable income up to AED 375,000 and a 9% rate on anything above that. Easy, right? Let's talk about some key concepts. You've got tax groups where multiple companies can consolidate into one taxable entity. Exempt persons and income, which include government entities and specific types of income like dividends and profit distributions. And don't forget small business relief for those with revenue below a certain threshold, simplifying their tax obligations. Transfer pricing and withholding tax are also crucial. Transactions between related parties must reflect market rates, known as the arm's length principle. And a portion of income may be withheld for tax purposes, particularly for state-sourced income. Double taxation agreements prevent businesses from being taxed twice on the same income. All taxable persons must register with the Federal Tax Authority, FTA, file annual tax returns, and pay their corporate tax within 9 months of the tax period's end. Registration gets you a tax registration number, TRN, your passport to navigating this tax landscape. And that's your quick guide to mastering UAE corporate tax in 2024. Remember, staying informed and compliant is key to avoiding penalties and optimizing your tax position. Share this video with fellow business owners and drop your questions in the comments below. Thanks for watching and see you next time.